Traders Club. Welcome to the market update. Today's December 27th, 2019, Friday. As I record this video, market should be open another 1 hour. So you might be seeing some flashing lights on your left. Hope you guys had a good Christmas holiday a few days ago with your family and friends. And so this video will be the last video for the year 2019. So next time I come to you next weekend, we will be facing 2020. So I think this year, I think I've had pretty good year, and hopefully you guys also had pretty good year as well. And if you guys been following me on YouTube and Twitter, and you know, I did my best to try to navigate this market, and I did my best trying to help you navigate this market as I've been, advocating that this is not a level that we're going to see a recession or a crash or bear market, right? We talked about, I think early January, like January 1st or 5th or something like that. I did a video, the market update video is still there. Talked about why we're going to get into a V-shaped reversal, and this could very well go back up to near all-time highs, or at least near that level. And it got up, and then as we pull back, we've been talking about how these levels will be a good level to accumulate more, or to maybe buy those dips. While I think in the summertime, a lot of people were pretty bearish, and a lot of people were, because I think a lot of people are still scared of what happened in late 2018, right? So it's a funny thing, because just the other day I was on YouTube and this came on my feed. So there's this guy. This was so this video actually was produced in October 2nd, 2019. October 2nd, 2019. You can probably go find it on YouTube. But so what he's saying was that not only we're going to come down, first he was talking about bearish rising wedge, and there's a reason I don't share this to make fun of this guy or to brag that I was wrong and Bloomberg is wrong and I was right and the Bloomberg was wrong. That's not what I'm trying to get at. I want to educate you guys not to pay attention to these guys, because they've been saying the same things for years. 2012, 2013, 2014, 2015, 2016, 2017, 18, 19, they've been saying this for years, and and this is how they profit. Bloomberg and CNBC is not an investment company. They're TV. They make money on your viewership. They make money on ads. So for them, it is very crucial that you tune in. So once they start talking about some kind of a like S&P up to worst quarterly since 2000. Why do you think they used 2009? Because everybody remembers 2008 and 9, right? And then as you watch this, you're scared, right? You're scared, and you want to tune in. You want follow-ups. You want updates. You want to come back to Bloomberg. This is very important to you. This is regarding your investment. This is regarding your hard-earned money. And so basically in this video, what they're saying is, there is there's this wedge. He's talking about this rising wedge, and we just broke below it. And not only he's talking about it's coming back down to to the lows, the December lows. He's actually talking about it this video. If you go watch it, his name is Walter Zimmerman. Again, I'm not picking on this guy, because around this time, pretty much throughout this year, like CNBC, those quote unquote chart masters came out saying something similar, and then we got all kinds of different people saying the same thing. But he's calling, not only he's calling the December lows, he's actually in this video, he's actually talking about 2100. I want to get that perspective for you to see, so you get the visual. 2100 on the S&P is 210 on Spider. So he was calling that here. Did you know, though, there's a fun fact. did you know that on October 2nd, while he was looking for 2100 on S&P, did you know that he actually called bottom with that call? So if you actually did the opposite here, that's the same chart. Look at that. Okay, so he just, right, he came from the lows and he drew that line, right? He drew this line all the way to right here. That's October 2nd. So let's go to it. So October 2nd here, I'm gonna prove it to you. October 2nd, that's October 2nd. There, right, October 2nd, come on. 2nd, that's October 2nd right there. Yeah. So he drew that and then he was calling this bearish rising wedge. So if you actually did the opposite, I remember tweeting this out. Back in October 2nd when we broke below it. You know, this could be the trap before this thing reverses. So if you did the opposite while he was calling for 2100, then you'll be doing pretty well because actually the market is up about 13% in just since October lows. So you see how crazy that is. You know how when it's not that this guy is stupid and you know that that's not what I'm trying to do. Is that I think most people are scared because I think this was the biggest down day too. You can see how we had that bearish day and then we gapped down at another bearish day. And something that I talked to you guys about is that, you know, everybody nowadays draw these lines and this is not the correct way to draw it anyway. But because I mean, think about it. First of all, let's put this in a perspective. Like, why do you think? Because if you did this, like, look at that. If you did that, we did the same thing here, and we just got right back up. Because if you did this way, right, we got below it, but we just got right back up. So we do the second one, we got below it, we're just getting right back up. So if you're just looking at that, you'd be like, why just breaking below that is all of a sudden becomes this huge rising wedge and this guy's calling for 2100, right? Does it make sense? And also, you guys remember I told you guys about that he's also talking about broadening pattern. So right here, so that's what he's talking about. And this is what I remember CNBC Chartmaster was also saying this. That's what they call either broadening pattern or a megaphone pattern. And so they're calling this as a megaphone pattern and it's going to come back down, right? And again, he's actually calling for 2100. And so if you just, and I tweeted this out again to you guys before, I think back in October, you know, when things were pretty hectic. October's right here. And I actually tweeted this out for you guys to see. Every time when we had a broadening pattern, it was bullish pattern. It was not bearish, especially when you see a breakout, You see how they distort the masses this way, right? If you want to be wrong, then follow the masses. Market fools the majority, therefore the majority follows the fool. Let's get into our analysis here. Let's start with, you know what, let's get rid of this. Okay, so let's start with Spider today. Qs, Diamond, Russell, Banks, Semi. I know we talked about trends per last week. Let's keep it there. We'll look at it too. So something we've been talking about is, first of all, we've been talking about this level here. We saw breakout. We saw very, very quick retest. I mean, it just was 2-3 days. And you see how fast that thing moved up. Do you know why? Because Now that it was breaking out, everybody was getting ready to buy that dip. And something that I've been talking about is everybody was looking at like that, right? They were looking at this and they're looking for this thing to come back down to retest that level to buy, because they're looking for about 7-8% correction. They can't go long after about, you know what I'm saying, after about 1.5-2% correction, after you missed out entire 30%. You kidding me? After you missed out 30% move, you're gonna go full-blown bullish after 1.5% correction? No, you're looking for at least 8%, at least 8, maybe 9, 10%, right? So everybody was looking for that, and something we've been talking about is the market is not gonna give it to it. Or not, market is not going to give it to them, right? Market always for the majority. And people are maybe still scared that this could be potentially mother of all trap, right? But you see how funny that is, how this thing quickly came to that level, right? Because all year long, it hasn't been respecting certain levels. It really hasn't been, right? Market has been kind of like, you know, like if even if you look at it like this, you can see how it will either break below it, some shenanigan around that level. Everybody's looking for some, like everybody, okay, you see that we broke above it like that, and then we saw like that's what, 7% correction, right? After we made new all-time high. So here, after breaking out like this, you see that broke out right here. Well, they're looking for at least 7-8% correction, because last time when we cleared and broke out, we did see about that much of decline. But this time around, you know, we didn't, you see how here, we didn't find support at that level where it was prior resistance. We actually broke below it, broke through it, and then we held there for like a month. It's a lot of volatility. I remember there was a lot of bears expecting for a big drop, because a lot of people are talking about, they're actually comparing this move to this move, right? They're comparing this move to this move, like that, right? Flush, bear flag, continuation to the downside. Flush, bear flag, continuing to the downside. So they were very scared. So, and then it did not respect, I think most people are scared because they did not see this thing respecting this level, finding support at that prior resistance. So right now, people were like, you know what, this thing is crazy, market is so crazy, market is so volatile. So even when we break out, they're very skeptical about the market. And so, and then this thing came down very, very quickly here. They're like, oh my, no, this time, no, this thing gonna come down. This gonna come down, break below it. And then most people are ready. If we do see coming down to 290, 297 or something like that, 295, I finally want to buy that dip because the market is breaking out or something like that. Or people are still maybe thinking about shorting it. I don't know. But quickly, you see how fast we reversed back up, and that was it. I mean, market is up almost 15% since October lows. Pretty much it shot up, and we had a just quick decline. It's been grinding higher ever since, every single day. S&P 500 is now 30%, Qs is 40%, Diamond is 23%, Russell is at 25%. Do you remember when the Russell was the most lagging index, and everybody was saying because of small caps and the banks, they're lagging, they're gonna drag everything down? And you can see how the banks and S&P year-to-date percentage is now equal, 29%. Semi, 63% is crazy. Transport still, you know what people are saying now? Now they're saying, well, look at transport. Look at the transport, man. Transport is not confirming the Dow Jones. Don't you understand the Dow theory, bro? Dow theory, man. They must confirm each other. So they're always picking at one thing. It's kind of like this. If I come to you and say, you know what, you're vitamin D deficiency and you're going to die. Are you going to die because you're vitamin D deficiency? No. Are you going to die because you're vitamin C deficiency? No. I can't just pick one thing and say you're going to die or you're going to have cancer. No, it's going to be, it's going to be, your body is much more complex than that, right? Market, the way the market moves, so much more complex than just using transport not confirming the Dow Jones on new all-time highs. You can't look at that. You can say that, you know what, yeah, they're lagging a little bit. I think transport could, you know, follow, and then that is going to help the market continue higher. But we can't just say, well, transport's lagging, therefore the whole market is going to crash down, or the whole market is drag everything, or transport's going to drag down, or therefore, well, is a cautionary signal. We have to understand S&P is up 30%, NASDAQ is at 40%, Diamond is 23%. Excuse me. Russell is catching up. Banks have already caught up. Semi 63%, and Spider, Qs, Diamond, Semi, they're all hitting all-time highs. I would say it's kind of a cautionary signal if I see only the Dow making all-time highs and every other indices still below all-time high level and the trends were lagging. Then I'd be like, oh, I'm not sure yet at this point. I want to see other indices to kind of be in sync with others. But now we got Spider, Qs, Diamond, Banks, and, and semis. So 80% or 70% more of the indices are, thriving to the upside, making new all-time highs. Just like how you saw XLF and the Russell 2000, catching up with the indices such as Spider and Qs, you're going to see transfer also catching up. We can't just say, well, the market is in a dire situation because transport is not confirming the all-time high like Dow. Just a lot of times, actually, when this happens, this is how the market gets propped up. Because think about it. If every single indices goes up together higher and make new all-time highs, they're going to fall together and they're going to fall much harder. But what if we see Spider going higher, Qs coming higher, but they kind of take turn? So that what happens is, as the Spider go higher and Qs higher, and XLF or the Russell 2000 and the transport, they lag, right? They don't go up higher. So while the S&P and the NASDAQ, they're kind of floating around. They're not seeing a steep decline. They're just floating around. In that process, in that time being, you see some of these laggers start to make its run. Maybe when that happens, market can continue to float higher and higher. You see what I'm saying? Because if they all go at the same time, which that's maybe a lot of people are expecting, they're all going to fall at the same time. But if we see this happening, then you see how market is kind of rotating, right? You see how Spider go off first, or the semi go first, and the NASDAQ and the Spider, and as they take turn, then the market, especially large cap index like S&P, and then tech sector like Qs, they can continue to be propped up. Sooner or later we're gonna have pullback, yes, of course. Market does not go straight up, but we have to continue to give benefit of doubt to the buyers. And something I've been saying about it is when the banks were lagging, when everybody's fearful of banks, and this is probably a good time to accumulate, which I've been talking to. I've been letting you guys know about that, right? So if you're thinking, transport is kind of laggy here, maybe it is good time, because it's hard to buy stocks that are extended, like something like Apple. You can't buy Apple here after Q's up 40%, and Apple's up 100% actually since the December lows. Apple's up 100% since the December lows. You cannot start chasing Qs here and Apple here. But what if you go and look at some of these underperforming stocks under transportation average? Maybe you can find some stocks that are undervalued that has a potential for a run next year. You see that. And that's exactly what I did with the banks and the small caps. And as I let you guys know, if you've been following me, that I told you that I've been accumulating bank stocks. Not only that, I was buying XLF calls, these lows, every single lows. Because I remember when I think XLF was down here, Spider and the Qs, semis were already near all-time highs. Instead of trying to chase those, why not get into a lagger? And then when XLF, you get that here. So from here, you can see XLF is up 20%, 20 versus 13% on Spider. You see what I mean? So it would have been a good idea to, chasing some of the stocks, the large cap stocks that has already gone up quite a lot. Maybe look at the time back in the summertime, back in August and October, right? Then look into bank stocks that were lagging, like Bank of America, Citigroup, which they were all lagging. Like if you look at JP Morgan, right, which I own in my portfolio, what if you bought here and here and here when they're lagging, right? Then you would have been up. If you bought stocks, that's 32%. If you bought options, that's quite a bit. Quite a bit, right? So at this point, 320 was my target. By end of this year, we hit that. We continue to move higher. I think 330 is my next target. I don't know if we're going to get there before their year ends, which is we got 2 more days left. I'm not sure if it's half day on the New Year's Eve, but I have to continue to give benefit of the doubt. It is extended, but we don't know where the top is. And we don't know when we're going to see a correction. We will, but we don't know. So again, this is something I told you that last week, that this is not a level to start chasing this up here. This is a level where if you've been long since these lows, maybe you can take some off, especially if you have those aggressive positions like call options, right? And take profits. But this is not a level to start chasing it unless you're a scalper and you like to scalp things and trade it intraday, which I think is stupid. But anyway, let's go to Qs. Q, same thing. Same logic applies. It's just, nothing really changed since the last Friday's analysis. We just continue to move higher, right? Diamond, same thing. We broke out of this multi-year consolidation. Can you imagine after that kind of consolidation how much it can go, right? We had about 2-year consolidation. I think there could be another 2-year run to the upside. Of course, we'll have pullbacks and corrections along the way because the market is not going to straight up. And there will be other chances to accumulate more, but this is not a level. This is not the level to start chasing. You had your chances down here. And you didn't get that. You can't chase it up here. Unless, of course, you're a scalper and you day trade. Financials, same thing. You can't chase it up here. If you didn't buy it here, you can chase it here. After this kind of move? No. After 20% move in 4 months or something like that, you can't chase it. The same thing with semiconductors. Semiconductors up 63% year to date. If I actually go, from the lows, that's 77% from the December lows. You can't chase it up here. You had chances. You had your chances. You had your chance here and here and here. Which, remember, I've been navigating this with you guys every week. And when this thing pulled back, I even gave you guys the level. This is probably a good level to buy that dip. This is a level where we see that prior resistance level, right? This is, you can see right there. There's a congestion level right there. There's prior support, prior resistance. And then that also coincides with my Fibonacci support level, which is that 50%. Which I did. I was buying that dip here. But I think it's, again, people always say, yeah, man, anybody can get rich. You just keep buying the dip. Those people say that. Those are people who never bought the dip. Because you think buying the dip is easy. It is actually not easy. Because if you're already long, you're gonna have to face deficiency in your account, or at least you feel like there's deficiency. You've been conditioned since you're born until now. You've been conditioned. If you have deficiency in your bank account, right? If you have a deficiency in your bank account, you do not spend, you save. But when you have a surplus, what do? You buy. So when you get your paycheck, after you pay your bills, you got some money left, what do? You go out and eat sushi, you go out and shop, and you buy things. But towards the end of the month, when you have deficiency and you got rent coming and you're short, what are you going to do? You're going to save. So let's say you're already long semiconductor, and then this thing starts coming down. You're holding your positions, you're coming down. You feel like, well, I was gained this much up here. Now my gain has, decreased. I feel deficient. So buying the dip is actually not easy because you feel like, wait, what if I buy this dip, this thing comes down even lower? Then not only I'm going to lose whatever already I had, all the gains I've already had, I'm going to even lose more buying that dip. See, people don't understand that. Only stupid people say that. People who never bought the dip ever, never worked out for them, they will say, oh yeah, anybody can buy the dip and be rich, man. Just keep buying the dip, bro, and you be rich. They're just basically ridiculing bulls, but they themselves cannot do it because buying the dip is not easy. Just think 2018 December. Who was buying this dip? Tell me, was that easy? Buying that dip in December 2018, tell me, was anyone buying this dip? If anybody was attempting to buy that dip, was that easy to buy that dip? No. If you did buy that dip, was that easy? No, it wasn't. It wasn't easy. It's not easy. And then afterwards, you buy this dip and buy that dip, holding everything. You hold whatever you're buying here, and then you face that drawdown. So you're making some money up there, and then you face that drawdown. There's a fear that maybe, well, this is double top, this is gonna come straight down. A lot of people, when they face drawdown, when they face fear, they get scared. And when you're scared, when you're fearful, you're defensive. Just like when you face with deficiency, you save. Because you've been conditioned this way your whole life. When you're fearful, when you're scared, you become defensive. So actually buying that dip is going against your human nature. When you're scared, instead of being defensive, you become offensive. That's hard. You guys are gonna go against your whole human nature. You're gonna go against what you've been told to do, what you've been conditioned to do your entire life. So when you have a deficiency, let's say you've been long, you bought it here, whatever. You've been long and you're facing deficiency in your trading account. Your whole life you've been conditioned to save, right? Preserve when there's deficiency. But are you able to even buy more here? Because you gotta go against what you've been conditioned to do, right? It's difficult. Buying the dip is actually extremely, extremely difficult. And people who doesn't understand says things, stupid things, because they never done it, right? They never done it. And they're just jealous that bulls are making money and they're broke. Let's go to IYT and end the video with this. I can't believe how fast 26 minutes go. It's crazy. It's 26 minutes already. There's so much talk about. There's so many things going on in the market. It's crazy. There's not enough time. That's why I try to make this video like 20 minutes, like 20 to 30 minutes. And my member video today went in like hour and a half because that is not even enough trying to explain everything. There's so many things going on. But anyway, like transport, it's been huge consolidation. When was the last time you've seen something like that? When was the last time you've seen a huge consolidation? Like what happened? Look at Russell 2000. That looks like Russell 2000, doesn't it? We just pretty much hanging around here, consolidating. Guess what I was doing on the Russell 2000 when it was consolidating? I bought that, I bought this, I bought this, and I bought that. Do you guys remember? I even did a journal post. Do you guys remember back? If you've been following me since 2017, you guys remember that I was buying this. I was buying call option this, and then this thing break below. Remember this? And then everybody, all your experts, all your, chart masters, and all these teachers on Bloomberg, like, oh my God, this thing finally breaking low, and this thing is gonna go to 100 on the Russell 2000 ETF. I bought that, and then went straight up, right? So when you see a consolidation, especially when you see other indices already propped up, you gotta look at this as more of a bullish signal, right? And then we broke out. So what does that look similar to? Well, it looks similar to transport, except well, Russell 2000 is already kind of breaking out. Well, transport is not breaking out yet. There's a potential here on the transport, huh? Right? There's a potential here, right? I'm not saying it's going to break out next week or, early January, because if market decides to pull back, then we may see another correction on transport before finally breaking out. We may even break below the lows. If we do see that, maybe that's a good time to maybe buy that before this is possibly going back up, or we break out higher. Anyway, when you look at this thing, you can see that it's been consolidating and looks a lot like Russell 2000, where it's been doing the same thing here, and then it finally broke out, right? So I think my approach right now is, crap, I just messed up my orders here. I want to put it back. There. My approach is, I am bullish. I've been bullish since, early part of this year. I'm bullish in the market, minor term, intermediate term, and primary term. I'm very bullish next year. I think S&P could do another 20 to 25% next year. If it's really good year, maybe 30, but I'm leaning towards the 20-25 on S&P next year. Q's leaning towards 30-35. And XLF similar, Russell about 20% or something like that. Dow about 20% as well next year. We're probably gonna, I've said this last year, but probably not gonna see a correction more than 8%, but maybe 10 something, but I'm leaning towards 4 to 8% corrections next year, throughout next year as the market goes higher. So we'll go higher. We see about 4 to 8%. We go higher, maybe 4 to 8%, maybe consolidation for a couple months, go higher, something like that. But I don't think we're gonna see correction higher than 10%. So I'm leaning towards 4 to 8%. That's what I'm expecting. I'm targeting 400 by the end of 2020. But if we get to 380, am I going to be mad? Oh, no. If we get to 350, 360, am I going to be mad? No. Targeting 400, but if we get to 380, I'll take that. If we get 350, I'll take that. But I think regardless, I think market, we're going to have a good year next year. And I am positioned that way at this point. And let's see here. Yeah, so this is going to be the last video for the year 2019. I'll come back to you next weekend, which is January 3rd. And I am still doing my December promo, which will end December 5th, which is a Sunday evening. And then there will be no promo until late 2020, which I usually do about once a year. So you can go ahead and check that out. All right, you guys have a wonderful weekend and happy New Year's. And good luck trading next week.